Good morning, everybody, and welcome to this Wenta webinar to talk about common pitfalls when starting in your businesses. So what I'm going to do now, I'm going to share my screen and we can get started. So good morning, everybody. So as I said, my name is Sheila Bell of Swan Systems and Cygnets. As we're Swans, we created Cygnets as a startup program for anybody thinking about starting in business and the things that maybe there's no point everybody falling in the same hole. So we'll try and support everybody as we start. So a little bit of housekeeping to begin with. So you can pop your phones on silent, she says, as she's doing around because she forgot to do it before she started, and put any email alerts and things like that on hold. So I promise we'll only aim to be an hour, won't take up any more of your valuable time. And if you have any questions, please pop them in the chat. Sim's monitoring this as we go along all morning, and she's also got young Ben from us as well this morning. So I've got two people on the chat line, so let's keep them busy. So my name, as I said, is Sheila Bell. I'm the owner of Swan Systems, which is bookkeeping and payroll company, and then we decided we'd have Cygnets, and Sim is our Cygnet coach and one of the bookkeepers within the company. So Cygnets is here because I had so many people going, I wish I'd known that when I started. And that's normally when they're about 12 months into their first year, very excited and amazed that they're still in business and they're keeping going. And then suddenly the reality is that they've got accounts to do and various things to do for HMRC and that sort of thing. And then they realise maybe there's a bit more to it if they're known at the beginning. But as you're part of the Wenta programme anyway, the Wenta coaches are brilliant. And at the end, you get a half an hour, the option of a free half an hour session with Sim to book. So keep that in mind as we're going through. So as I said, it's a modular programme, and you can take it in your own time, do as much or as little as you like. And it also includes your bookkeeping software when you first start off. We've got another webinar in next week, I think it is, or the week after, about which bookkeeping software to use and what's the right one for you. But I've got a couple of questions for you at the beginning, so a little bit of audience participation. So how many out of 10 do you think businesses fail in the first year because they know nothing about the finances, nothing about money? It's not their thing. So if you can pop the answers in the chat. So this is an out of 10. So is it 1 out of 10, or do you think no bit or every business fails? Well, hopefully not. You can pop that in there. We've got a very sophisticated system of me knowing what your answers are. Sim's next to me, and there's and we have a trail of post-it notes. So I've got an 8, a 9, and a 6 out of 10. So your actual answer is 9 out of 10 businesses fail, not succeed, fail, because they don't know what they're doing with the money. They don't know where they are with their cash flow. So this is why it's so important that you have to know your pennies and that side of thing, which is why we're here. So this is a percentage. So if a business has good and excellent bookkeeping, how many survive in the first year? So somebody that gets their software sorted out, keeps it up to date so they can actually see what their numbers are. So this is a percentage out of 100. So this is the people that are organised. So if you think that this is only 10% of businesses that start, because we said that 1 out of 10 are the ones that are there, then so we're going down in percentages now. So we're trying to make sure that you are. So I've got a 10%, an 80 and an 85. Well, that's a bit of a split on that one, isn't it? We're a bit undecided. It's 63. So whoever was 80%, then you get a little bit of a gold star this morning. And you got a 70 now, she says. Oh, right, there we go. So that's 60% if you've got good bookkeeping and you keep. I mean, there's lots of reasons why businesses fail, but this is why actually keeping a track of your accounts is so important. So on the last one, just if you do nothing, if you just have a pile of envelopes and go, I'll find an accountant at some time, then or it's really not my thing, I'm muddling along, it will all be fine, then how much percentage then? I've given you the answer now. We're trying to put my name in. So I'm going to say it is literally, it is only 2.5% survive if you do nothing. So this is why it's important that you do keep a track of your numbers. So what we're going to do is that we're going to have a little look about what happens when you start in business, and then we're going to look at some stories of certain businesses and what happened to them. So it gives you a flavour. So it is me talking at you, but we're doing it in little stories. So this is the things that you need to ask yourself when you start, which is, how do you know you're going to be successful? How do you plan to be successful? And what makes businesses fail? What not holes to jump through? So we're really dealing with number 3 today, and the other Wenta coaches and that help you on the other 2. So we're going to say, we're looking at types of company and company format. We'll talk to you about the business model canvas, which is a way of you testing to see whether your business is viable. Is this a good idea? Keeping organised, keeping the great HMRC happy. We'll talk about something called Making Tax Digital, you might have heard about, and we'll look about getting the money in, because it's not yours until it's in your bank account. So we are going, and we're going to see what Sam's story is this morning. So Sam's a mechanic, really good at what he does, got a rented garage, and he's a sole trader. So he works on his own, doesn't have any staff. He's maybe tried that previously and gone, no, don't do that. Got very good home work life and everything else. So what could possibly go wrong in Sam's story? Well, Sam had an accident. His situation changed. It wasn't a work accident. I mean, at any time then suddenly, or you could be suddenly taken ill totally unexpectedly, and it meant that he couldn't work for 6 months. So therefore his bills became a problem to pay, because of course when you go to the garage you pay, you know, you don't get your car back until you've paid for it to be done, do you? So you don't have he got some savings, but he's going through his savings and fell behind on his rates and still like that. So he got no income. So it's very difficult then, if you, especially when you're starting out, if you haven't got that buffer just in case you're ill. So why has that gone like that? So so the consequences are that he was liable for everything. So unfortunately in Sam's case, he hadn't actually got any money, any savings. So he had to go and move house. So that he got some money to make sure that he could sort of keep going when he got better. So maybe can you pop in the chat what things you think that maybe Sam could have done to have avoided this situation? How could he have protected himself from a sudden thing? So it might be that he had an accident. I'm going to say you could be suddenly ill, or it might be that something happens in your family, that side of things. You have to take time out of your business because personal things are more important than your business. So let's have a quick look to see what we could have done. So we've had an insurance. That's a good one. So we'll talk at insurances. When we come to Cygnets modules, we've got a whole module on the different types of insurances, of business insurances, of personal insurances, and motor insurance. Insurance is a bit of a minefield when you come to running your own business. I've got savings and limited company. So let's have a look and see what we could have done. So, I don't know why that keeps going to a blank screen. I'll do it differently. Right, so the advantage, so he's a sole trader. So what's the advantage of being a sole trader? He keeps all his profits to himself. He's got complete control over his own business, makes all the decisions. And he doesn't, there's no way that anybody can see, because you don't register with Companies House or anything. So everything is private for the amount of money he earns and everything else. So there are disadvantages, as we've seen in Sam's case. So any losses you're liable for. Also, if you haven't, Sam's case, then you've got to make sure you're okay. And it's all based on you. You haven't got anybody else to help. And sometimes you hear of business venture capital, people that are willing to invest in your business, or if you do Dragon's Den, that sort of thing. If you're a sole trader, then the people like that, they don't tend to like that. Whoops. So you have got the options of also being in a partnership. So being in a partnership means make sure that it's maybe easier to get the funding, because there's maybe two of, I mean, a partnership could be 2, 3, however many people you're together. The responsibility of everything is shared, so it doesn't all fall on your shoulders. And also, you know, sometimes, you know, more than one brain is better than another. The problems are that if you have, for some reason, you fall out, that can be very difficult in a partnership. And also sometimes you've got to make sure that your taxation's right. And it might mean you've got a bit higher profits, so you've got a bit of tax to pay, and losses are borne individually. What I'll say for anybody that's considering being in a partnership, even if it's sort of like, you know, you with a partner of, you know, husband and wife or son and daughter, whatever situation it is, then make sure, it costs money, I know, but make sure that you have a proper solicitor drawn up, legally binding agreement as to how the partnership will end, or if a partner wants to leave the partnership. So if I give you a scenario that a solicitor actually gave me, was two guys that decided that there was an app that they wanted to do. So you've got somebody that was very techy, very geeky, created the app, which these things don't appear overnight, took long time. And then the other partner was the guy that went out and sold it, demoed it, that sort of thing. So of course, at the beginning, the guy that created it put an awful lot of work in, and there wasn't much for the sales guy to do because he got nothing to sell. But then you come 5 years later and the guy, the app is doing very well. They're getting lots of money in, and the sales guy's going, well, I'm doing a lot more than you are. You're just tweaking the app of odd bits that need doing. I want to have more money. I can't see why, you know, I'm getting all of this in. This is all for me. And they had a huge falling out, and it ended up going to court and things because they didn't have a partnership agreement. So it's all of this sort of thing. So if you think of your partnership, the one thing to take away from today is make sure that you get a legally binding contract between you, or it might be that it's two friends together go into business, and then unfortunately maybe one partner dies, and therefore the family want to have their part of the business. And of course, that is something that you never envisaged when you first started out. So somebody on the suggestion said limited company. So what's the pros and cons of a limited company? So a limited company means that you have to register with Companies House. You get your unique business name. No other business can have your name. And you can offer shares to people so you can get money in. So that's okay. There are disadvantages. The accounting is more complex. So when you come to do your business accounting, your accountant's fee will be more if you're a limited company, because you've got limited company accounts to do. And then with the money that you take out, whether that be drawings or salary or whatever, then you've also got your own self-employed, self-assessment, own tax put in. Whereas when you're a sole trader, you've just got your own self-assessment to do. So, so it is more complicated from an accounting point of view, so therefore will cost you more money. I'm going to say, if you've got shareholders and things, then, you know, they can maybe, if you've got quite a few, then it might be that they decide they want to take the company in one way and you want to take it in a different way. But if they've got a bigger share capital than you have, then the business can go in a total way that you don't want it to go. So it's another thing that's it's pros and cons if you're a limited company or not. But it does give you something. So for like Sam's, it might be that he could have closed the limited company and started again, which I know people don't like the idea of, but especially now post the pandemic and things, then quite a few businesses managed to keep going during the pandemic, but then have had to close, but then have continued on in a new guise. And for the insurance that somebody came to, yes, you can have sort of like insurance if you can't work, that side of things, that business interruption insurance, they're quite good, but it's quite costly. So you've got to have a look and see whether that's actually worked it. And the other thing is that if you have got some money, is to not spend it all and keep some for a rainy day fund, as mum and dad would say. So if we've got any, hopefully I've covered things on there. Has anybody got any queries or anything regarding Sam, or the type of company that you think you might, type of business entity it's called, that you think you might be? So I'll give that a couple of seconds to see if Sim's got anything there. I've got you. Yeah, so we'll now go on and have a look at the business model canvas and see what happened to Rose. So Rose is a creative business, doing websites, that sort of thing. Very good at what she does. Was very good at getting everybody in the top of Google. It's all this SEO search engine, isn't it? You must be at the top. And was very well, you know, as she was doing, people got lots of customers, and she got some staff as well, so that's marvelous. And took on some rented premises because there wasn't enough room where she was before, and everything was going rosy. So what possibly could have happened to Rose? So circumstances change. Nothing in the world of business ever stays still. If you try and stay still, you go backwards. So you've always got to be looking at what is the next thing and being proactive and moving forwards. If you go, I'm happy with what I've got and everything else, you are immediately going backwards. So she hadn't really thought about that scenario. She was quite happy. All business had just sort of come to her. She hadn't really had to go out and go, say, business networking or do advertising and things. And she got somebody who did the same thing, very close to her, and because they were working from home, of course their prices are cheaper because of course she's got staff and an office and everything else. So that sort of took a lot of the local business away, because suddenly this other person was, you know, more affordable, and when people are struggling, they'll go and look for somewhere that is cheaper than what they've got, which I think is happening a lot at the moment. And also, as I said, Google and all of the other things that you go and search as, they change their criteria. So at one point it was the number of people that entered your website. I think now, from what I've found out from SEO people, is that you need to have something, so video content and that sort of thing is the way to go now. That's what the Google search engines and everything are looking for. And suddenly Rose's business herself wasn't at the top of Google and her customers weren't. So the customers started going and she stopped having inquiries. So that's not very good when you're in business. So, so she hadn't got any other way of generating business quickly, hadn't done a plan for the marketing and sales to look at other revenues and to go in different directions, hadn't understood what a danger it could be to a company and maybe what her weaknesses were. So unfortunately her business failed, which means that she'd got loads of bills and things to pay, and she got 6 people as well as herself out of work. So how do you think that Rose could have avoided that? If you want to pop that in the chat for me, I'll give you a couple of seconds to go typing on that. It's always difficult when somebody asks you to do typing. My fingers don't work quick enough. No, I can't see Sim scribbling. So I think, so hopefully that will just give you a bit of food for thought. So, so if we explain the business canvas model that we use, this is the first thing that if you become Cygnet that we go through with you. So this looks at your idea, but totally from your potential customer's point of view. What is their pain point? So if they've got an issue or a problem, then you might think that you have the solution to that problem. So it might be that somebody thinks they've got a problem, but would they value that problem being solved? So that's the first thing to think about. The other thing is that you might look at it and say, yes, we can solve your problem, but then you look about how you get to those people. Would it be an easy thing to sell to them? That side of things. And a few steps down the line, do you actually look at the money side of things? So it might be that you could solve their problem, but it would take an awful lot of time, and then it would be expensive, and people wouldn't value, they wouldn't be willing to pay that amount of money to have that problem solved. They wouldn't see the benefit of it. It also might be that you found a wonderful, innovative way of solving the problem that nobody else has, and you can do it for 50% less than everybody else on the market that's maybe got that solution for somebody. But then you've got to think of it from a customer's point of view, that if you're suddenly 50% cheaper, that if you look at something and say, oh, so, you know, everybody else is charging maybe £500, but this person's only charging 200, then you look at it and go, well, they can't be saying they're doing the same thing because it's so much cheaper. It can't be right. There's a snag there, and there's a hitch, and you don't go for it. So you've got to think about it totally from a customer's point of view. A lot of people, when they're starting out in business, have this wonderful idea saying, this is what I'm going to do, and then try and sell it to people without looking at the customer's point of view from the very beginning. So this is the business model canvas that we go through with you on the start of your Cygnet journey. So as I've said, it's split into customer segments, the value to people, how you market it, how you look after it, then the income, and then looking about the resources and businesses you can work with and that side of things. It originally came from Silicon Valley, where investors were investing in 10 companies, 9 failed. As we said, you know, only 1 survives, 9 failed and 1 flew. And they went, why are these 9 failing? I mean, the one that flew gave them all their money back for all of them because it's the business it's in, but why are the 9 failing? And this is what they've come up with. This is why they didn't look at what the customer wanted. So as I said, you're very close to your own idea. And it's your baby, as Swan is my baby and Cygnets is my baby. So it's a question, it's very close to your heart, and sometimes you can't actually look at it sort of from somebody else's perspective. And with the best will in the world, if you ask friends and family, if they're not business people, they probably can't help, or they just go, that's a marvelous idea. And also sometimes if somebody is going, oh, I'm not quite sure, then because some of the way that your brain is at the time, you might go that they're just being difficult because they can't see it, you've not explained it properly. So it's a good time to actually have somebody externally look at your idea and see whether it is an actual sort of like will work. So I don't know whether we've got any answers. Yeah, so good marketing plan and a forecast is to make sure, as we've said for Rose's story. Yeah, so as I said, you do get a free half an hour with Sim for attending this webinar, so we can address if you get any queries that come up during, or you think it's one of those things you only think to ask it after the person's gone, don't you? So we're on to Drake now. Now, Drake is a very brave man because he's up on a roof, and it's that, don't get me up a ladder. So very good trades, very good at what they do, don't like, so if you're a trades, I'm sure you'll go, yeah, I don't paperwork, don't do paperwork, I'd much rather have hands-on, get me on the job, and I'll be doing. So he was very good. He did keep all his receipts and invoices, kept them all together, and at the end of the year he went and took them to the accountant. During the year he knew where he was, there was money in the bank, people were paying, and he felt that everything was going really well. So so what could possibly have gone wrong with Drake? The thing was, he had done really well, and of course the accountant is always doing your accounts of a year that's gone, So you're potentially 15, 16 months when you get your accounts done. If you think about it's 12 months, you get all the paperwork together, send it to the accountant then processes it. Drake, when he'd done various things of, pottering and getting any paper he needed, or maybe his partner or somebody he'd told the lads to just go and get some paper or whatever, and not all the expenses have gone through the business. So of course, then you get more profit. And of course, the accountant's going, this is great. You've now got a lot of tax to pay HMRC. Of course, there wasn't that amount of money sat in the bank account. So Drake had to take out a large bank loan to actually pay all of the tax that he got to pay to HMRC. And of course, then that has a hit on the next year, because of course he's then going, I know now I have to save up this amount of money towards the tax, but also that's a hit on your cash flow. And of course, also every month he got to pay back the loan. So for the next couple of years, cash flow was a bit tight. So this is why doing your accounts are important, even though I see a lot of people who go, we're all fine, I've got money in the bank, I've got customers, the world is fine. But you really do need to know behind there that is the actual key, and not miss actually claiming little bits of expenses that you think is insignificant. So as I've said, he didn't know his numbers, he hadn't planned for it. And of course, he's got bank fees for overdraft, he's got interest payments for the loan. So have we got any ideas of maybe how Drake could have avoided what he was doing on there? So I'll give you a couple of seconds if anybody's got any ideas, and have a slurp. Yeah, again, I think post-pandemic, some businesses have done very well, because of course, if you imagine being in business is a bit like being on a seesaw. As I said, you can never be level. Very difficult on a seesaw to be level. So of course, when something goes down, there is always an opposite effect. So of course, in the pandemic, a lot of businesses struggled, especially in hospitality and things, but there were other businesses, chemical industry, and some of the manufacturing did very well, and also the protection products and things like that. So yeah, you can have, sometimes some businesses fail because they are suddenly too successful. They suddenly have a huge growth spurt, and they just can't cope with it, and it's too much. So it is a question of saving and having a plan and a cash flow. But a lot of this goes back to, if he'd actually done his accounts on an accounting software, he would have known how much profit he was making. So therefore, he would have known that he would have had to have paid, and he could have done it every month and go, my profit this month is, and then he could have worked out the tax from there. So that's a lesson for everybody there. So I'm going to say you need to keep your business organized. And then if you've never seen the word reconciliation before, it's a very long word, and it can sound a bit scary. So if you imagine you have your bank statement or your credit card statement, and then you just look at your statement, especially like with a credit card, and then I suppose in days of old, you would have a piece of paper receipt, and you cross-reference the receipt with the credit card and go, yes, the receipt says I spent £25, it's £25 on the credit card, and you check it all off. That is reconciling. So it's a very easy thing to do, but you need to do it and check it, especially things like credit cards, because you don't know whether somebody somewhere along the line, I mean, these things happen without you even realizing it, that somebody's managed to get hold of your card details, and they tend to take a couple of pounds or dollars a lot of the time as a trial to see whether you notice and whether it goes through or not before they maybe try larger sums of money. So it's always, you must reconcile your bank account, because if the great HMRC come and want to check your business, they will literally go and say your bank, as your accountant will, your bank statement is 100% correct. And they will literally go through the bank statement and check that everything you've got is on the bank statement. That's what your accounts are based on. So it is important that you actually check against your bank statement, that side of things. So I'm going to say we've sort of touched on this as sort of doing the reconciliation. Is basically your bookkeeping, and you need to know your numbers, because we've had the cash flow problems, and also if you're looking to grow and maybe you want a loan from somebody or a grant like Wenta, if you're in the right area, if there's available at the time, Wenta can get grants for you. So you need to be able to say, this is where I'm up to and this is what I'd like to do. Also, maybe if you're not up to date, things are, don't leave it till the last minute to send your accounts to the accountant and expect them to jump and do your accounts in 2 days at the end of the year, because that's not fair. It's not right. You've had time to do it. So if you miss a tax deadline, HMRC are getting very hot on their penalties now. They were very good over COVID and realised that people were in trouble, but those sort of kid gloves have gone now. They've changed the VAT penalties, and it's a way of the government getting extra money back. So, you know, also, if you haven't done things, you might think that you're not spending very much, but when you actually do your accounts, you realise that, you know, you spent an awful lot, a lot more money than you thought you had on coffees and things like that. I'm going to say that fraudsters are out there because it's easy money. Small businesses are easy pickings. Don't be one of their things for that. And also, you know, if you go overdrawn and that side of things, then it's going to cost you money, and you don't want to do that. The other thing is just make sure that if you go and you know, pick up some folders or paper or an ink cartridge or something like that whilst you're doing shopping, so easy now to just pick these things up and you just pay for it in your general shopping bill. Make sure those are genuine business costs. Make sure those costs go through your business, because if you don't, you've got more profit, so you pay tax on it. If you take money out yourself, you pay tax on it. And also, potentially, if it's like an ink cartridge or something and you're VAT registered, you won't have reclaimed the VAT on it. So make sure that these things, that you keep these things going. So see whether I've seen Sim typing, but I think that's just answering queries that don't come to me. So I think we'll go on. So let's have it. We've mentioned the great HMRC, so let's see what happened to Claire. So Claire has an admin business, doing very well, got some staff, and she's VAT registered, because if you have a turnover of more than 85,000, you have to register for VAT within, you know, if you've realised you've gone within a month of turning over more than 85,000, then you have to register for VAT. And she duly did, because of course everything here is like service based, so she hasn't, her costs to provide the service is her staff, and of course there's no staff, there's no VAT on staff or anything like that. So what happened to Claire? So because she hadn't really thought about it, and of course the customers pay in full, which includes the VAT, and of course the VAT you do quarterly, every 3 months. So suddenly she did a VAT and realised that a VAT was £15,000 that she needed to pay. So your VAT quarters work, say January, February, March. You get a month April to get all of your paperwork in and do all your accounts, your bookkeeping. And then at the end of April, you send those figures to HMRC, and you have till the 19th of the next month. So in this case, it'd be May, for you to actually pay that money to HMRC. So when you're VAT registered, you need to think about, when you're looking at what you're invoicing, what your costs are, which then goes to making sure you've got things like I've said about the ink cartridge in the supermarket. Make sure that you put through anything that you've bought that might not have been paid through the business. It's got VAT on it, that's a legitimate business expense, that you reclaim that VAT. It makes a difference. So I'll see whether anybody is coming back as to how we could have avoided or prepared for having such a large VAT bill. Because even though you're prepared at some points, when you've actually come to do the VAT, you go, oh, I realised I did it, you know, that was a good month, didn't realise it was that good. So let's see, I can't see Sim typing or anything, so we'll potter on. So how does HMRC view VAT late payments? As I've said, from the 1st of January 2023, they have upped their penalties, and it will be quite difficult for some people, and it will cost more than it did, let's say, last year. So we've got a few questions there. Yeah, so yeah, I've got somebody that says put the VAT aside, which is the right thing to do. So again, say your VAT is payable quarterly, as we said. Your current rate of VAT is 20%. Now, as I've said, during COVID, HMRC were quite helpful and did payment plans and things in place for people over their VAT. But those they are much more stringent, because of course, when you, as soon as you, what HMRC look at is, as soon as you, for most people, as soon as you raise an invoice on standard VAT, on that date, that VAT money is accounted for. And as far as HMRC is, then that money is already theirs. It's not yours, it's theirs. You can be on what's called cash accounting for VAT, which means only when you pay money or receive money, the VAT is calculated. That goes up to about 130,000 a year. No, sorry, not enough noughts. 1.2 or 1.3 million you can go up to on cash accounting before you have to go on standard. So just have a think about that side of things. But you need to, if you're going VAT registered, you need to have a think about how you put that VAT on one side. Again, if you've got bookkeeping software at any time, at the end of the month, you can have a look and see what the VAT is on that month, so you know how much you've got to put away, because it will be the VAT on what you've sold and the VAT on what you've bought, and then you can have a look and you know what to put. If you've got most standard business banks will allow you to have a deposit account, or you could have 2 or 3 deposits account. I think I had a customer once who had about 7, so you've got one for the VAT, and one for the corporation tax at the end of the year, and another one for the rent that he paid, because that was quarterly, so he put money away every month. And it went on and on and on, and he'd literally got a deposit account, put money in every month to make sure he'd always got the money there. Also, just as an advisory, HMRC, if you get really behind on your VAT, have the option to close you down. So that is the ultimate. If you go, I'm paying everything, everything's fine, I just owe HMRC, never mind, we'll get round to it, they'll be fine. They have the option of closing your business down completely. So that is the ultimate. They don't like doing it, but that is the ultimate if you do not pay or contact them. So we'll just have another look at, we talked about sole traders and limited companies at the beginning. So if you're a sole trader, you pay tax on your business profits. This is your own taxation, your personal taxation. And also you have to pay national insurance, and they've got what are called class 2 and class 4 national insurances to pay. So one is class 2 is that anybody who's self-employed has to pay a small amount of national insurance every. It used to be that you paid every week, now it's just done at the end of your financial year. And then also you have to pay class 4 is national insurance on your profits. So also if you're a sole trader, because you're taxed on your profits, you can take as much money out of your business without having any tax implications. So if you're then a limited partnership, limited company, then you have what's called corporation tax. So that is normal tax and everything is 20%. At the moment, corporation tax is 19%, up to 100,000 profit. Over that, then it's going up to 22%, then 25%. The government has now put it in tiers. So the bigger companies, as you get bigger, you've got more tax to pay. So you don't have income tax or national insurance to pay on your limited company, but as soon as you become a director, so as soon as you can have a salary out of your limited company, which is normally, most people can earn £12,500 a year without paying any tax. Doesn't matter whether you're a sole trader. That's your tax code when you're an employee. So you can earn 12,500, but then after that, then you've got tax and national insurance to pay. So if you're a limited company, you pay company tax, you can take your own money out, and then you've got to pay tax on any what are called, you can have some money on dividends, but the amount of tax relief on your dividends, the government is gradually, it used to be you could have £2,000 without any tax. From April of this year, it's only £1,000, and from April of next year, it's only £500. So, and at one point, like a couple of decades ago, you could have as much dividends, there's no tax at all. So, so things have changed. So this is why you need to know what the taxation is, what the implications are when you start off. So whilst we're talking about HMRC, we're going to talk about this new Making Tax Digital and why it matters, because this was meant to come in about 2020 and now we're looking at 2026. Yeah, so let's have a look at Rhiannon then. So Rhiannon is an online seller. So she got lots and lots of products with a little bit of profit on each one, but the whole thing was that she needed to sell a lot to make money, which she was doing. And somebody at the very beginning said, oh, you don't need accounting software. I've set you up. She got an idea herself about an Excel spreadsheet. So she'd set up an Excel spreadsheet to keep herself going with what she knew she was doing. And that was all working really well. So as we all know, this is sort of what Excel looks like. But she was doing so well. She went over the £85,000 in a year and had to be VAT registered. The other thing is that, of course, because it was only a small margin, she had thousands of small transactions, all on this Excel spreadsheet. And now you can only send your VAT information to HMRC via a software that HMRC has agreed. There are hundreds out there, so it's not like it's only one or two. But you have to send it digitally. You don't get a VAT piece of paper that you fill the numbers in and post it away. All has to be done digitally now. So she was struggling because, of course, everything she got was on Excel. And also she found that it was taking her a long, long time, if you imagine, to put everything in Excel, that she was getting a bit behind with sending things out to the customers because she was spending so much trying to keep on top of the paperwork. So she got no way of sending stuff to HMRC, and she was finding that she was, getting up early, trying to put all the paperwork in, getting all the information out of the online sales she'd got, and was struggling to keep on top of everything. So I'll see whether anybody's got any suggestions of what she could have done. I think I'm bamboozling everybody now. Nearly there. So, right, so what she needs to do is actually have some bookkeeping software, because the bookkeeping software will do all of the automation for her and send the information directly to HMRC. The other thing is that a lot of Amazon and PayPal and Stripe and that will link into all the digital online softwares. So we're talking about things like Xero and QuickBooks and Sage. But as I've said, we've got a bookkeeping software either next week or the week after webinar on those. So you can only send them digitally now. So that's what she needs to do. The other thing with this making tax digital is that you're going, I'm never going to go over 85. I'll make sure that my sales never go over 85,000. I hear that quite a lot. But from April 26, any company, so I mean company includes sole traders with a turnover of £10,000 or more, or any landlord, doesn't matter, even if you get a penny from your rental property or you get nothing and it's empty, you don't earn anything, you will have to do what's called a tax digital quarterly return to HMRC from April 2026. It was going to be about 2020, and because of everything that's happened, we are now got a date of April 26. So this means that you will need to have digital software there to be able to send in how much, it's three things: how much you've sold, what you've bought, your purchases, and what your profit figure is. It's just three totals to start with, is what they're looking for tax digital, so that HMRC get an idea of the tax that's due to be paid. And I'm going to say, if you're a landlord, you've got to do it. It doesn't matter whether you've earned any money or not, because I think HMRC have worked out that quite a few landlords have not been actually saying to HMRC, or don't think that they need to tell HMRC that they've earned this money. Might be that a couple get together, they've got a spare house, and it might be that even that they might have a member of the family, and the member of the family just rents the house off them and just gives them the money, and they don't think that that's actually an income and they've got to pay tax on it. So this is where HMRC are coming from. You can use software, but you have to then have a bridging software that transfers Excel content into the right format that HMRC wants to be sent. So that's quite fiddly. So it's probably not really an option. You need a proper digital bookkeeping software to do it. And as I've said, it needs to be approved by HMRC, but there are hundreds out there, because there's lots of softwares, say for electricians, there's special software out there that make sure can do all their certificates and things, and in the process does the accounts as well. So there's lots of, the specialized software for logistics and printing and everything. So it depends what business you're going into, of which type of software you need. So I don't know whether we've got any questions on that. I can't see Sim or Ben typing. So we're on our last story now, and I'm going to make you hungry, ready for lunch. So this is talking about collecting your money in, and we're going to talk about Adele. So Adele makes donuts. So I always like finishing with this one to make me hungry. And got a little shop selling to people as they walk through the door, but also she did catering for, if people wanted for birthday parties and that sort of thing, and also local businesses. She used to do special things for them if they got a board meeting or something like that. And also some of the other shops around sometimes bought, because it was easier for them to buy off her because there was such a good quantity. But a few of the people that she'd sold to didn't pay their bills. And they were all people she knew really well, like semi-friends. So she didn't really want to chase them. She felt it was a bit difficult to go, I need the money, you need to pay me. And she thought that if she got difficult over that, then they might say, well, we'll go somewhere else then. And then she'd lose the business. So it's always a bit difficult when you're sort of like chasing money, especially because sometimes your customers become your friends, in inverted commas. So the consequences is that, of course, she'd still got the shop to pay for. She got all the ingredients to pay for. You can't make donuts without ingredients. She's also got the staff to pay. So she's paying for all of those. And then, she was running out of money in the bank. But if you looked at her accounts, they look quite good because she was owed lots of money, but she wasn't chasing it. She wasn't getting the money in. So therefore, she was having difficulty paying her own bills. So then you get a scenario where the suppliers go, well, until you've paid that bill, we're not letting you having, you can't have any more eggs, or you can't have any more flour. So you get in a very difficult situation here, that you put yourself in difficulty, because you're not willing to chase somebody else. So the whole point is that you must get the money in. The money, cash is king. The money is not yours until it's sat in your bank account for you to have. So, so what happens if you don't collect the money in? So you can be sued by the people, sort of like your suppliers, by law, can take you to court, and they can actually get your business wound up if you don't pay, the same as HMRC can. So make sure that you get your debts collected, because you're not somebody's bank. You're not a banker, and you'll be surprised when you actually chase people for money, that some people are mortified that they haven't paid you. It's just that they're so busy, they've just kept meaning to do it and they haven't. It might be that you've been dutifully emailing all the invoices, and you've gone into somebody's spam. It might be that they don't use that email address anymore, so they haven't even received the invoice to pay. So you must make sure to collect your debts in. I know it can seem scary, but I mean, we do a lot of debt chasing for people. You don't have to do it yourself, and a lot of the time it is that people have just not received the invoice that you've sent them. So it's important that you just, especially if you have a new customer, make sure that you ring them up and check the right email address to send an invoice to. Make sure that it might be that they don't pay an invoice unless they raise purchase orders, because of the way the systems work in their business. If you don't put the purchase order number on the invoice, they can't tally it up, so therefore it sits there. It will never be paid because you haven't put the purchase order number on. It might be that they own, I've had this last week with a client, of somebody who went, well, we haven't paid because you haven't sent us a statement. We only pay when we've got a statement so we can check all the invoices are on. So it's little things like this at the beginning that you need to know and check with a new customer. And also, when you first raise your first invoice to a new customer, ring them up. I know people don't like using phones to ring on anymore, but ring them up and physically speak to somebody and say, have you got my invoice, to make sure that it hasn't gone into spam or something like that, so that you can make sure they've got it. And normally that shows you're proactive, and it sorts out, you don't have a lot of problems moving forward. So as I've said, I hope that today has been useful for you. Sort of we scratched the surface a bit about starting in, but a few little things just for you to think about. As I've said, Cygnets is here for you. I'm going to say, if you want to put your name and email and phone number in the chat, then you get your free half-an-hour consultation. The webinar, as I've said, is being recorded, so you can get hold of Wenta, and then Wenta can then actually send you a copy of the recording. It doesn't get sent automatically. You need to request of Wenta to have a copy. Also, you can have a look at what you want to do and everything else. So we hope you found it useful. Not got too hungry looking at donuts as it's nearly 12 o'clock. So if you want to put your names and emails and your phone number in the chat so that Sim can contact you. Also, if you put your email in, then you will get some information. We do a little feedback survey just to hopefully make this better, to see what you thought about it, see if we can do things better, or if there's anything that you felt that was really useful and helpful, so we know that we're doing the right thing for you. Because starting out in business is so scary. Then it's always nice to know that there's somebody there when you're starting. So hopefully you've enjoyed today. I can see Sim taking up some information, so thank you very much for your feedback and things. And I'll just have a quick check for if anybody's interested in the bookkeeping webinar. Is that we are doing, actually it's next Wednesday at 11 AM. So we're doing, if you're not sure about bookkeeping software, what is it, which one do you go for, what does it look like, we actually show you screenshots of what the software looks like. then that's next Wednesday morning. So I'll see how we're doing. I will stop sharing my screen. That's okay. So we hope you have the rest of a nice Friday afternoon, and we've given you food for thought to think about your businesses. I don't know whether you can hear the frantic typing of Cygnets to you. I'm going to say, if you want to, if you have any queries or anything, you can go back to Wenta. Wenta is there for, I'm going to say, you've got lots of webinars to go to, and also the business support of the coaches is there. As I mentioned, depending on what funding is out there at the moment, sometimes Wenta has got grants. If you're in, sometimes it's depends which region you're in or area you're in, and what you're going to do, but it's always worth speaking to Wenta to see if there's some grants out there. Because if somebody's willing to give you some money to help towards running your business, then it might be that you pay 50%. You normally on the grants you pay 100% and then you get 50% back. But that is always a good way to go. So I'll just doubly, triply check with Sim that everybody's that we're all done. Yeah. So thanks again, and hopefully we'll see some of you next Wednesday. Thank you. Bye bye. Have a good day.